What's up YouTube, it's Louis here. I hope you're all well in these times. Today we're going to be looking at Matic Polygon, and we're trying to gauge this market, basically understand what's going on. There's going to be a lot to explain today, and hopefully I can explain it as well as possible for you guys. So of course, literally for probably 2 months now, we've known about this rising wedge, and its target is 68 cent down at the bottom, where the green and white box is, the green line of the white box is down here. So that is technically a target and basically should go down there, but we know there's some certain levels that we can bounce up from to get to basically invalidate further downside. Now, if we're looking from this previous all-time high to the bottom of the July low, we're so far away from it. So for me, we're bullish until we lose this low. So technically this is like a cheat sheet for the rest of the market, because the rest of the market is so bearish right now. A lot of them alts have lost this low. Bitcoin is in and around here. If we're like comparing it to this chart, Bitcoin did make that high, but then it's come back all the way, and it's probably sitting around in and around here if we're comparing it to what this chart looks like compared to Bitcoin, basically. So yeah, for me, Polygon's technically like a cheat sheet because it's so much higher than the rest. It's held up very nicely. A very good coin to be holding right now in this dip. So that's the first point. Now, of course, the reason why I said we've measured from there to there is the 0618 sitting here. As long as we're above $1.55, we've basically validated all these technical targets: $4, $5, $6.50. But we have now lost that. This is the level you can see previously, where you've had multiple separate occasions bouncing from this level. 1, 2, 3, 4, 5, 6 occasions when you bounce from $1.55 and held it. And look at this last final one. You were all the way up at $2.39. You came down to $1.54, and then a crazy bounce and a push to $2.58. Another break of that high there. But now you've come down. What should have happened here is you should have sat on this swing low, which we were doing a few days back, and we were expecting that double bottom. Now, of course, that's what we're anticipating, but we always get ready. We always make you guys aware of the next situation. And I've been saying for weeks now, if we do lose 190, we will be coming to this 1618 target at $1.62. So I'm happy that I was able to tell you guys and get you guys ready for that. Of course, I wasn't anticipating that we'd lose this low, but you can see that we're now coming to these two targets. We're getting rejected from them, and hopefully we can get our bounces. But as long as Bitcoin hasn't bottomed, this actually will continue down, and the next technical target is down here at $1.32. You could see that actually that's lining up with this larger 0.50, and technically speaking, when you lose the 0618, you do go to that 0.50, and that's sitting at roughly $1.29, or we can say $1.30. This is the next key level of support that we must see held. And actually, in actual fact, when we draw the fibs, we like drawing pockets, just like we had this pocket here. And this is the next point that I wanted to say. Because we lost this golden pocket and the 0 point down here, you basically invalidated that $3.30 target, so that's no longer in play. And you saw we had that golden pocket box to basically say, as long as we're above this, we're good for continuation. We can actually now do this over here. It's a big box. So that's, I don't really like drawing crazy big boxes, because obviously when we're looking at price action inside, we're all zoomed in, and it's like, oh yeah, we're just basically, yeah, we're going to have boxes inside of boxes inside of boxes, and it will get confusing. But I do need to show you guys this whole area, and this is the area that we must hold above. We lost the top of it, so we need to hold the bottom of it, the 0.50. So as long as we can do that and print higher than that, you can see it's still higher than this low, and technically you should keep going up. But yeah, if you lose that low now, technically your next target is the 382. But if we're looking at as a swing low, it would be this area over here. So this would be your next support point, $1 to $1.10. If we do lose this $1.30, and of course lose that, you have this 236 target, previous swing high. Not the best support really. Look where you bounce from, in and around down here. So it's more like this swing low is the key level over here. So about 69 cents is like the target out of this rising wedge, basically. But at each of these points, like this low here or this low, you can get bounces and basically invalidate further downside. We need that bounce. So I can give you targets to the downside, just like with these fibs. But if we're looking at price action, we need a pullback now. So if I show you this quickly, I hope I can explain this and make you understand it. No, let me just double check this quickly. Yeah, okay, so perfect. So you can see here, you lost the one, reversal wave created, target 1618, beautiful target met, had a pullback before continuation. So if you lose the 1618, you come into these two targets. You came to the 2.272 here, and when you meet this target, basically what it means is that potentially you have bottomed, at least in the short term. And so that means you're going to get a pullback. With that pullback, you want to see a double bottom then formed. You want to see us basically closing above this, and you see come up, come back down, and you couldn't close above this. When you lost that, you're basically going to continue down. And now this push up here from after meeting this target is where we'd now measure from. So the fibs are telling us where it's going to go to, and this is your final target down here before getting really overextended. So when you get overextended, you're anticipating a pullback, and then we measure that pullback as we did. And if you do lose that one, then you come to the 1618 where you'll get a pullback. You see we got to the, well, we almost got to the 1618, had a pullback respect to the 1, so that's basically saying that we're going to go lower than the 1618. You've come to these two targets now, and when we get a pullback, then I can measure like from this, the lowest point of the pullback, to wherever it goes to. So say like from here we've gone up, and say we go up to here, so then I would measure from here to there, and if we lose that 1, we're going to go lower. But obviously I need that pullback, so for the moment I can only use these larger fibs for you guys. And technically, since you lost the 1618 at $1.55, you'll go to $1.29. so for now, without a pullback, we can only look at these targets. Once we get a pullback, it'll be a bit more clearer for you guys, and I'll do that as soon as I get that for you, which will probably be over the next days or weeks, which we get this pullback. Now obviously no one wanted to go into January like this, but for some reason I was anticipating that we would only start going up end of January. It might not even be that now, guys, to be honest. Like, this bull run is so dragged out. And remember, as long as we're above 28k, it's a bull run. So we must keep saying it's a bull run, because you're still printing higher lows. As long as you're above 28k, you can go to 28, you can go to 29k if you wanted. It's still a higher low. So, and obviously the cheat sheet being Polygon, because you're nowhere near that July low. So as long as you're above 61 cent, technically you're bullish. So you can come all the way down to 62 cent, you're still bullish, because you're printing higher highs and higher lows. High, low, higher high. Even if you came down to this, down to here, it's still a higher low, because your low is actually down there. So it's all good for me for continuation at the moment. Any updates, I will let you guys know. I'll catch you guys in the next one, and as always, peace.